Altria, symbol MO, sells cigarettes and tobacco products. Here's a 5-year plot of the stock price. It's been trending downward, which is not a great sign for a security that you'd actually want to own. However, if I go to the 1-year stock price, notice how it's been trending upward. It's even above its pre-COVID price, which was here, March 4th. Say what you want, but people are smoking more since COVID started. This is an $80 billion company with a fairly low, at least by today's standards, PE ratio, and a huge 7.8% dividend yield. If we go to the options, the 44.50 call expiring in a week has a delta of 0.28 and sells for 25 cents. This is a lower premium than I'd like, though it's been higher in the past. I'll continue watching the premiums on this stock to see if they recover. If they don't, I might get out of this underlying. I'm collecting about 0.6% of premium per week, which is below my 1% desired threshold. Here's my spreadsheet. I've sold 11 30 delta cash secured puts without getting assigned once. If the probabilities were correct, then the odds of this happening would be similar to getting 8 heads in a row flipping a coin, which is not very likely. So obviously the probabilities of being in the money are somewhat overstated with these options. So if you look at the premiums that I've gotten, they've ranged from roughly 25 to over 50 cents per contract. They peaked around here. I inadvertently sold puts right before the earnings date, which was January 28th. Luckily, I was not assigned on these shares. It's been going up ever since. So I've collected a total of $229 in premiums in less than 2 months, which is about 5%. That's very respectable. Still, in that same period, the stock itself has risen over 9%, which is fantastic for a stock that's been trending downward for the last 5 years. So as you can see, trading the options wheel definitely limits your upside when you get some rapid appreciation of the stock. In this case, I've given up about 40% of the upside. It cuts both ways though. When the stock price falls rapidly, if you're selling calls against those shares, it'll reduce your downside. So you could think of the options wheel for this stock, in this example, as about like a 40% hedged long position. But as time goes on, you can see as I keep selling cash secured puts, my cost basis will keep going lower and lower. So we'll see what happens.